Hello and welcome back to Explain the Charts. Today we're diving into the S&P 500 index, ticker SPY, to examine the current market sentiment and chart data to understand where it might be heading. Recent news and events suggest a mixed outlook for the market, with investors cautiously anticipating the upcoming inflation report. While tech stocks have seen a recent rally, some sectors like banks and energy are exhibiting weakness, leading to a somewhat mixed overall market performance. The market is currently in a state of uncertainty, with investors trying to determine the impact of the upcoming inflation report and the presidential debate. Let's examine the charts to get a clearer picture of the potential price action. Taking a look at the daily chart, we can observe a recent trend of consolidation, with the price bouncing between key support and resistance levels. The 50-day moving average is currently providing a significant support level around 440, while the 200-day moving average is acting as a strong resistance level near 455. The recent price action suggests that bulls are attempting to push the price higher, but they're facing resistance at the 200-day moving average. However, if the price breaks above the 200-day moving average, it could signal a stronger bullish trend. On the other hand, a break below the 50-day moving average could indicate a shift towards bearish sentiment. Zooming in on the 1-hour chart, we can see a more volatile price movement, with several bullish and bearish candles. The recent price action shows some hesitation and indecision, with the price bouncing back and forth between support and resistance levels. The current price is hovering near the 445 level, which is acting as a key resistance level in the short term. If the price breaks above the 445 level, it could signal a short-term bullish trend. However, if the price fails to break above the 445 level and instead falls below the 440 level, it could indicate a shift towards bearish sentiment in the short term. The recent inflation report is likely to be a catalyst for price action in the coming hours. If the inflation report comes in lower than expected, it could boost market sentiment and potentially lead to a rally in the S&P 500. However, if the inflation report comes in higher than expected, it could dampen market sentiment and potentially lead to a sell-off. It's important to note that these are just potential scenarios, and the actual market movement may be influenced by other factors. Let's shift our attention to the 15-minute chart, which provides a closer look at the short-term price action. The price action on the 15-minute chart is very choppy, with numerous bullish and bearish candles. This indicates that there is a lot of uncertainty and volatility in the market. The price is currently trading near the 546 level, which has acted as a key support and resistance level in the past few hours. If the price breaks above the 546 level, it could signal a short-term bullish trend. However, if the price fails to break above the 546 level and instead falls below the 545 level, it could indicate a shift towards bearish sentiment in the short term. Keep in mind that the 15-minute chart is highly sensitive to news and events, so price action can fluctuate rapidly. Therefore, it's crucial to stay informed about any relevant news or events that could impact the market. For instance, if there are any unexpected economic reports or political announcements, they could quickly trigger price movements on the 15-minute chart. In conclusion, the current market outlook for SPY is mixed, with both bullish and bearish signals present. The daily chart shows a consolidation pattern between key support and resistance levels, with the 50-day moving average providing support near 440 and the 200-day moving average offering resistance near 455. The 1-hour chart suggests a short-term struggle near the 445 resistance level, with the potential for a short-term bullish trend if the price breaks above this level. The 15-minute chart highlights the extreme short-term volatility, with the 546 level acting as a crucial support and resistance level in the recent hours. The upcoming inflation report is a key catalyst to watch, as it could significantly influence market sentiment and price action in the coming hours. If the inflation report comes in lower than expected, it could boost market sentiment and potentially lead to a rally in the S&P 500, driving the price higher. However, if the inflation report comes in higher than expected, it could dampen market sentiment and potentially lead to a sell-off, pushing the price lower. It's important to stay informed about the latest news and events, as they can trigger rapid price movements on all time frames. Monitor these key levels closely: the 50-day moving average near 440, the 200-day moving average near 455, and the 445 resistance level on the 1-hour chart. Watch for any breakouts or breakdowns of these levels, as they could signal a shift in market sentiment and provide valuable insights into the potential price action. Remember, trading involves inherent risks, and it's always important to conduct your own research and develop a sound trading strategy before entering any trade. Happy trading!